Mayuresh, but then what do we, the whole week we saw that the budget focused talks were in action this week. You talk about infra, defense, fertilizer, or cement. What should we aim at now? Should we look at these sectors scaling, achieving new heights going further?
Afternoon, Priyanka. No, I was hearing your opening remarks, both on macros and micros, and it's a pleasure to be on your show for the first time. But two things happening here. One, I think the markets are looking forward to what the probable budget announcements would or might be. Our own take at Markets with India is that the reform processes which have continued for 10 years, there would not be any significant change in terms of capital allocation for a whole host of schemes that the Modi government has embarked upon. Infra development and infra allocations is expected to double over the next 5 years. There is going to be significant allocations as far as defense is concerned. You've already heard statements related to rural and urban affordable housing. And therefore, I think roads, railways, highways, ports, infra, manufacturing, I think the capex in terms of budget allocations will continue. The second part, in terms of how the markets might actually behave, post the budget, and our expectation again is that there might be no negative surprises that the budget will probably throw up. We will still continue on the path of fiscal consolidation, and therefore that should be taken positively by the markets. The additional 1 lakh crore also gives sufficient amount of elbow room and headroom for the government to probably play around with in terms of both allocations towards infra as well as reducing the fiscal deficit in general. So to that extent, a lot of freebies which are expected by the market, which was the fear, I think should not come through. I think it should be a more prudent allocation as far as the budget is concerned. And therefore, we'll head back to earnings. And earnings are expected to hold up in the 12 to 14% range. Domestic cyclicals is something that will still continue doing well. And a whole host of sectors. You pointed that out. You've seen huge moves continue in sectors like defense, railways. But in our opinion, I think selective stocks within the infra theme, cement theme, water treatment, water allocation, I think that could be a big theme for the budget as well, is something to be looked out for. Consumer staples discretionary both selectively should start doing well with good monsoons expected. Rural recovery in real earnings should start coming through in the second half, which will give a huge leg up for these segments of the market as well. So I think more focused on the domestic areas at this juncture. Our take is that a balanced and a mixed approach in terms of your portfolio, including some stocks from pharma, can absolutely hedge the aggressiveness in the domestic cyclical overweights that you probably got. So remain optimistic on the markets.
Naresh, thanks for that view coming in, but I'm going to